Given the mixed economic data, that threat of deflation, economists we surveyed think the Fed will not make any big move today. No changes in the bond buying program. They will likely be on hold until the last 3 months of the year. That's the expectation in our survey. 34%, the highest percentage, tells the first change in the bond buying program will happen in the fourth quarter. Again, that doesn't tell us whether or not they think it could be an increase. It could be that's one possibility, as Mike just discussed, but a pretty high bar. 30% say the first change will happen in 2014 or later. 23% say will happen at the September meeting. One big reason for that view right now, since the last meeting, 7 Fed policymakers, including 5 who actually vote on the FOMC, have publicly voiced support for maintaining the current pace of bond purchases. When they do move for the first time, the median forecast in our survey is that the Fed will scale back the $85 billion a month in bond buys to $50 billion, split evenly between Treasuries and MBS. That's the median forecast, and several economists telling us the challenge for the Fed, Betty, will be how do they taper this program enough to actually make a difference without signaling to the markets that they have started a tightening cycle. They will want to carefully judge what happens to the economy and interest rates when they do first make that move.
So when do economists think the Fed will end the bond buys altogether, Peter?
Well, this has been changing a lot over the last few weeks and months. Most economists say it's going to happen in the first quarter of next year. 11% say it's going to be in the fourth quarter of this year, but 39% say it'll be in the first quarter of 2014. You combine that with those who say it's going to happen in the second quarter. 61% say by the middle of next year the bond buying will be over. Former Fed Governor Larry Meyer told Surveillance this morning, for the moment, the Fed believes the benefits outweigh the risks.
There are benefits, and that asset purchases are working. I think the question is, when will the cost-benefit balance turn unfavorable? The committee clearly thinks that hasn't been the case up until now, and we think it'll become increasingly important as asset purchases continue.
Again, Betty, no big change today expected in the Fed statement. Maybe some clues as to what's going to happen to that bond program in the future.